Welcome back to the Bar by Bar series. Today I'm excited to break down two of my biggest trades of the month. First, we have a higher time frame breakdown in Nvidia. And then just a day later, I flipped long and caught a mean reversion long as Nvidia got overextended. Stick around because I'll dive deep into my exact thought process, share my morning game plans, and reveal how incorporating options into these day trades allowed me to hold for the bigger moves while keeping FOMO at bay, freeing me up to trade my stock positions much more effectively. Let's get right into it. All right, so first trade we're going to dive into is this higher time frame breakdown on Nvidia from the 24th. First, let's take a look at my morning game plan just to get an overview of my thoughts from that morning. And then we'll do some technical analysis. So here's a quick look at my morning game plan. You can see morning plans, quarter 3, 24, and this is what they look like. I know a lot of people always ask, how do you create a morning game plan? What do your morning game plans look like? So in addition to this information I have here, I just want to throw it out there that I always have an understanding of the intraday fundamentals, right? So what's the ATR? What's the average volume? What's the short interest? Institutional ownership? All that good stuff. I also always know what my key levels are. So if they're not all listed here, they're definitely marked off on the chart. Typically, it's a prior day high, prior day low, the prior day's close, the pre-market high, pre-market low, and higher time frame support and resistance levels. Jumping into the morning of the 24th, what was interesting to me, and you can see that I wrote here, want to keep a close eye on the semiconductor space today. Google did not increase CapEx for the year, which isn't a good look for semis. Last quarter, when all the big cap tech companies were increasing CapEx, so we have like Microsoft, Google, Meta, Tesla, Apple, they were all increasing CapEx specifically to get as many AI chips as possible to train their models. And that helped drive semis higher. And now it just seems like for the first time, there's a huge clue here that the aggressive purchasing strategy is slowing down. It's the first time all year Google has not increased CapEx, so we might get the opposite effect. Like these helped continue the run in semis last quarter. And now I'm thinking, all right, this may lead to weakness in the semi space. And the morning of the trade, there was a pretty big gap down in Nvidia. Jumping into the plan for Nvidia, I write here just a quick overview of the higher time frame. So Nvidia broke the top of the 3-day range, filled the gap from the 17th, failed from the 10 and 20 simple moving average, and now it's gapping down almost 2% back inside that range. Not a great look technically, and I think this could lead to a test of that huge 117 support level, which is also the 50-day. So we have a higher time frame support level with confluence, and we'll show you that in a second. If it can't bounce in the morning or tries to bounce off the open and fails, and SMH is weak, I would look to buy puts, also a stock position for a test of that 117 level. I could see it testing today and then breaking tomorrow. We also have this pre-market range to work with, so we may possibly get a pop and fail into 121. And I won't chase weakness off the open. We're getting a 2% gap and one of the strongest stocks. I don't want to chase weakness. I want to wait for the stock to show me that it can't bounce in the morning. Right? If it tries to pop off the open and can't bounce, or the opening range is set and then it's holding below VWAP, then I'll look to get short on pops. Let's take a look at that higher time frame setup. So we could see this 117 support, and I would consider this really like a 9 out of 10 technically. The reason why I'll give it a 9 out of 10 is because in my eyes, something that's a 10 is like a multi-month resistance that's failed for maybe a year or more. This is really like a 2-month support level. Strong support, but not a support that has gone on for like 3, 4, 5, 6 months. You could see that over the last few days, NVIDIA formed this really clean range. About 122 by this 117. NVIDIA bounced from this 117 a couple times, broke the top of this range, and then filled this gap. You can see this gap from the 16th and the 17th, and NVIDIA broke above that 3-day range and filled that gap, ultimately failing from the 21 EMA and the 10 SMA. Now, what's interesting about this 2-day bounce was that SMH was leading the way. It was one of the strongest sectors in the market during this 2-day bounce. So market got a little oversold, NVIDIA got a little oversold into this higher time frame support. We broke that 3-day range. It seemed like the market was going to bounce. It seemed like NVIDIA was going to bounce. Like I said, semiconductors were the strongest. That's a pretty weak bounce. And in the morning, we have that Google news. We have a 2% gap down. And in my opinion, what could really help this trade is if we just think about the psychology here, these longs that were buying because they thought the market was going to have a multi-day bounce, they saw that SMH was the strongest sector during the bounce, they're probably getting pretty nervous as we fill the gap and there's a 2% down move in the morning and we're back inside this range. So in my eyes, there are buyers from the last 2 days that are probably bagged. In the pre-market, you can see this range here from about 120 to around 121. I was hoping for like a false breakout above that 121 level and then a hard move down. We didn't quite get that. And again, I just didn't want to chase any weakness off the open given the 2% gap down. In the morning, we have a first move up followed by a pretty steep drop. And then from there, we bounce. Now, what's interesting to me at this point, we're roughly a half hour into the trading day. What I notice is that the Qs are extremely weak in holding lower. Gap down in the Qs, first move is down, Qs break below that pre-market low, and they're just holding lower, and you can see how well this 9 EMA acts. And in addition to that, SMH, the semiconductor sector, is towards the bottom of my ETF ranker. So I have a market filter that just has about 30 different market sectors, and it's filtered by percent change from the open. And I remember that SMH was at the bottom of that ETF list, and that helps give me some conviction in this trade. So we have the tailwinds from the overall market at our back. So we get our first bounce to 119. NVIDIA can't break above 119. And what I decide to do is buy 117 puts for the following week. And I'm going to treat that as my trade to hold for the higher time frame breakdown. And the reason why I buy the following week's puts is to get away from that time decay. I don't want to have to worry about time decay during this trade if it doesn't work out right away, right? There's a pretty big gap in NVIDIA. It's very possible that it could just chop around, hold 117, and then break the next day. Time decay is not something that I want to worry about for this trade. So let me just buy the following week's puts, and that will sort of just take the pressure off having to watch that options position. If NVIDIA breaks back above high of day, then that means to me that it's just not as weak as I thought it would be, and I would just get rid of those puts. So following this move, we have a really clean failure from VWAP, putting in a lower high, and that's where I take my short. Using equity, of course, right on this failure. And my stop for half of that position is that recent high, and on the other half, I'm willing to risk to high of day. Oftentimes in trading, it's going to take you a couple shots to get your idea right. Truth be told, most of the time it's going to take more than one attempt, which is why I have in place the 3 strikes rule. I'm willing to give an idea 3 attempts, and if I don't get it right on the 3rd attempt, I'm out of that stock for the day and I need to move on because clearly I'm not seeing it right. That's the 3 strikes rule. It keeps me out of a lot of trouble. I end up getting stopped out on half of that position, and that's okay. As NVIDIA fails here, now I like to keep things simple. We could just draw this simple trend line from the lows, and as soon as it fails, I just get back into that position. Following that move, NVIDIA begins to hold below VWAP, our 9 and 21 EMA, and there's just a large offer at this 118.80. It cannot lift that price. It cannot get back above VWAP, and I'm starting to feel pretty good about this trade. Something that did sort of make me feel a little bit uneasy was the fact that QQQ was relatively weak compared to NVIDIA, right? NVIDIA is nowhere near low of day, and if we look around 10 a.m., Qs are just holding below that 9 EMA, grinding lower, making new lows, and NVIDIA is not anywhere near low of day. But it's acting well, so I'm going to stick with that trade, right? There's no reason for me to cover this short. I know where my stop is at this point. The high of this candle is 119.43. I'll just put my stop at 119.51. Again, just keeping it simple here, drawing this trend line. NVIDIA can't break above that 118.80, and then I notice some selling pressure come in here. At this point, the Qs are also starting to break and put in a new low. And I feel pretty confident that if this trade is going to work, it's going to have to work right now. And this is an ad for me. The stop for this, at this point, the stop for the entire trade is just above 119. It should begin to work. NVIDIA breaks the low of this consolidation. We see some selling pressure come in, and I'm adding my final piece to this position. And again, my stop for this entire position is just above this consolidation at 119. So then we have this nice consolidation at low of day. So we can look at this 117.50 area. We bounced from there, and now we're back at that 117.50, and we're holding there. We consolidate for about 40 minutes or so down here and cannot bounce. We're also holding below that 9 and 21 EMA. We do try to bounce and break back above that 9 and 21 EMA, but that results in a failure, and then we break lows on volume. That's my final ad on the equity position. Just a momentum cash flow trade here. And as we trade down to 117, there is a large held bid there with a few million shares on the bid side. And look, it's nice when we get a low of daybreak and it results in a quick move like we see a few minutes later. But oftentimes, what will end up happening is you'll get a break and a retest. Of course, it would be nice if we get the low of daybreak and immediately wishes down like this, but the next best thing that could happen is a break of that level and a retest. As we retest and then break down, we get this really clean momentum, and you can see the volume being done there. For instance, if we look at this bar threshold, this is showing me a 4 standard deviation 2-minute volume bar based on the last 10 days of 2-minute volume bars. So we're doing extremely high volume here, and we're also at this point about an ATR from high of day. And once I see this volume coming in and we start to bounce, I'm covering that equity position. So when that huge volume comes in, I'm covering my equity position. Really strong momentum there, and then you see this huge volume come in. We're about an ATR from high of day, pretty fast move down. I have no FOMO that I'm gonna miss some crazy move lower because I have the puts. I'm free to trade the stock and catch a leg of the move without thinking, oh, I need to hold this because the stock's gonna move lower. It allows me to freely trade that equity position. So the next trade that I took here was a little later in the afternoon. So NVIDIA puts in a series of higher lows and then retests this 117 level. Tries to put in a higher high, fails 117. What's interesting to me is at the same time, the Qs sort of put it in this double bottom, and they break back above the 9 and 21 EMA for the first time all day. That signals to me a shift in momentum, and the market should bounce here. The market should bounce. So holding back above those EMAs for the first time all morning and then fails, but we put in a little bit of a higher low here. We attempt to bounce again. Now we have a lower high, and we fail back below that 9 and 21 EMA. And that coincides with a failure from this 117 and this trend break in here. So as I notice the Qs can't bounce, I begin to take a short right in here around 116.70s. Just some simple technical analysis. We trade back into this 115.80 area. Holding, and I'm just going to cover that equity position. Now, as we get this break through low of day, and we see this volume start to come in, this is over a 4 standard deviation volume move based on the last 10 days worth of 2-minute data. That is huge volume. At that point, I begin to sell that put position, which is up roughly 75%. We fell from the 21 EMA, put in a new low around 114. At this point, we're down roughly 2 ATRs. Another large volume bar comes in, and I am selling the remainder of that put position. I just want to share a couple things that I think I could have done to really improve this trade. I think it's important that even after you have a great trade, you go back and you think to yourself, how could I have made more on this trade? What could I have done better? And the one big thing that sticks out to me is adding to my short after that break and retest in low of day break. That is an excellent momentum trade with a very tight risk reward. You could just risk a couple cents above the high of this bar. We're breaking that 117. There was a massive held bid there at 117. We know that 117 is the 50-day simple moving average and that 9 out of 10 higher time frame support. So the biggest thing that I could have done here was put on a momentum trade, trail by 2-minute bars, prior 2-minute bar highs, or even grab weekly puts for this momentum trade lower. And that is the one big improvement that I can make on this trade. All right, so now we're going to jump into the mean reversion long from the very next day. The following day, we get a gap down in NVIDIA, and it continues to follow through to the downside. So we get a first move down, we get a pop into VWAP, we get an opening range break to the downside. So at this point, I'm hoping that NVIDIA can flush out and give us some mean reversion long opportunity. As we're trading down towards around 108, NVIDIA is roughly down 15% over the last 3 days. It's down about 4 ATRs in 3 days. And the risk reward to the short side at this point just doesn't make much sense. I am looking for a long opportunity. So like I said earlier, sometimes a trade idea will take more than one chance. They're going to have to give it a couple chances to get it right. And same thing with this opportunity. This volume bar was very interesting to me. So the threshold into a 4 standard deviation 2-minute volume bar based on the last 10 days is 5.5 million shares. We're seeing an 8 million share 2-minute volume bar. It's extremely rare to see a volume bar like that. And of course, we have the highest volume bar of the day at 9:58 a.m. And we trade below 109 and reclaim. And as we reclaim, I'm going long. I'm noticing that huge, massive volume starting to come in. And we can't push up. we break back below 109 and put in a new low, and I'm getting stopped out below this low. So that was my first attempt. Following this, we push lower into 106.30. Now, something a little bit different happens here, right? We start to hold for 6 minutes. In addition, we have not gotten a break of a prior 2-minute bar high. Aside for the stuff move here that failed extremely fast, we trade back into 106.30 and we're holding. We're holding. Every time the stock gets below like 106.50, it immediately rebids 106.50. And then finally, we get a strong push off. And something that I just want to note is these volume bars. This is a new tool that I added to my studies, and it's just showing me the volume done on the bid versus the ask. So volume done on the bid will show red, volume done on the ask will print green. And this just tells me that there's a large bidder here willing to take all that size down at 106.30. It's not day traders sitting down there. In addition to that, if we look at the daily, we have a little bit of a gap fill here, right? A little bit of a support right down here where there's a large buyer willing to step in. How do I enter this trade? As soon as we break above that prior 2-minute bar high, we can no longer test that 106.50. We push up and break. I'm getting long. My stop is just a few cents below the low. So 106.30, I'm putting in my stop at 106.29. In addition to that, I'm buying the weekly 111 calls. Why did I choose those? Well, NVIDIA is down slightly over 4 ATRs in 3 days. It's down a little bit over 15% in 3 days. I think that we should get at least a 1 ATR bounce, which puts us at 111. So I buy the weekly 111 calls, and what really gives me confidence is this wick down here. NVIDIA pushes back down to that 106.50 area and immediately gets bought up very aggressively. And you could see now we have much more volume done on the ask than the bid side, which tells me that buyers, they want to get in. They're taking market orders at the ask. Get me in this immediately. We had a quick flash down and an extremely fast rebid. And this gives me a lot of confidence about this trade. Great opportunity to add here. A rule that I have is on the equity position on a mean reversion trade like this, I always want to take some sales into VWAP. So as we push into VWAP, I take some sales and I have no FOMO at all that I'm going to miss this huge move because I'm using the call position as my trade to hold. We trade into the opening range low, start to slow down, and I'm selling a little bit more stock. We trade back into high of day, and I'm out of my stock position. Something that I also just want to note quickly is how well NVIDIA held below that 9 EMA after the opening range break to the downside. It wasn't until that reclaim that the bounce started. And interestingly enough, we get a cross of the 9 and 21 EMA for the first time all morning, which signals a shift in momentum. The 9 EMA holds, and we push up. As we trade into high of day, I'm also starting to sell the calls. I sell 50% of the calls into high of day, and now I'm going to wait for a bigger reason to sell. Simply, we could just draw this trend line from the lows. NVIDIA pushes into 115, fails, pushes into 115 again, fails, and we start to break below that 9 EMA. In addition, if we just look at the daily, we also ended up filling that gap here from the pre-market. Trades into the prior day's close, and then starts to fail. And just a quick bonus scalp that I'll talk about to the short side. So we have this clear level around 115.50 that I have highlighted. Set up a nice range, broke above, tried to hold. We failed that. Retest of that high. As this trend breaks, I just take a small short, risking that recent high, risking probably roughly 5% of what I made on the bounce, just a small scalp opportunity using simple resistance. And as we put in this lower high and trade lower into the opening range high and support, I'm covering that trade just for a quick scalp. All right, thanks for tuning in, and I hope you learned something today.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of the laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of S&B Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with S&B to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part? You don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.